Good evening, everyone, and thank you for joining us for Infosys Q2 FY21 financial results. I am Garima, and on behalf of Infosys, I'd like to welcome you to this press conference. During these testing times, we hope you, your family, and your dear ones are safe and well. Before we begin, I wanted to share a few guidelines with our attendees today. Please note, all journalists will be on mute by default throughout the press conference. You will be requested to unmute yourself when your name is called out for asking a question. Should you drop out, please rejoin using the same invite link. With that, let me invite Mr. Salil Parekh, CEO Infosys, to take us through the quarter gone by. Over to you, Salil.
Good afternoon. I trust each of you are safe and healthy. We've had an exceptional quarter in the second quarter across multiple dimensions: client impact, digital scaling, growth, and operating margins. I'm grateful to our clients for their continued trust in us, and I'm proud of our team for their incredible commitment to our clients. Let me share with you the highlights for Q2. Revenues grew by 2.2% year-on-year in constant currency and 4% quarter-on-quarter in constant currency. Digital revenue grew at 25.4% year-on-year, and now it accounts for 47% of our business. We delivered an operating margin of 25.4%, and large deal wins were at $3.15 billion. Our industry-leading performance over the first half of this year has been due to the immense commitment of our over 240,000 employees. Recognizing the continuing stellar commitment from our employees during these times, we are paying out variable pay for the quarter at 100%. We will pay a one-time special incentive in Q3 for our junior employees. The salary increase process will restart now and will be effective at January 1, 2021. We restarted promotions in the last quarter at our junior levels, and this will now be expanded to all our levels. I'm thankful to each one of our employees for staying deeply committed to serving our clients as they have navigated their own personal challenges associated with the ongoing COVID situation, and also with the remote operating model that we are working in. So a big thank you to all of our employees and all of our clients. Thank you. And with that, let me hand it up over to you, Garima, for our questions.
Thank you, Salil. We will now open the floor for Q&A. Joining Salil, we have with us Mr. Praveen Rao, Chief Operating Officer, Infosys, and Mr. Nilanjan Roy, Chief Financial Officer of Infosys. In the interest of time, and to give everyone a fair chance, may I please request our media friends to ask one question per leader only. Let's move on to our questions now. Our first question is coming up from Kushal Gupta from Z Business. Hi Kushal, please unmute yourself and ask the question. Kushal, you're on mute. Could you please? Yes. Thank you.
Hi गरिमा, तो सबसे पहले तो जी बिजनेस सबसे पहले मौके के लिए आपका बहुत बहुत शुक्रिया एंड बहुत ही ब्रिलियंट रिजल्ट्स थे आप लोगों के, तो उसके लिए सबसे पहले बता देना चाहूँगा। और यहाँ पर मिस्टर पारेख के लिए मेरा है कि आपने गाइडेंस बढ़ाई दोनों फ्रंट पे और मार्जिन पे, क्या ये क्लाइंट कॉन्फिडेंस की वजह से है, कॉस्ट कटिंग या कॉस्ट सेविंग्स आप कह सकते हैं उसकी वजह से हुआ, या फिर जो एक्विजिशंस आपने पिछले कुछ समय में किए हैं उस वजह से हमें देखने को मिल रही है? दूसरा सवाल मेरा मिस्टर राव के लिए रहेगा, वो बीएफएसआई और रिटेल वर्टिकल तो हमने देखा है कि इम्प्रूवमेंट हमें देखने को मिली है, तो क्या ये कंटिन्यू रहेगा? और मैन्युफैक्चरिंग वर्टिकल जो करीब 9% आपकी जो टोटल रेवेन्यू है कंट्रीब्यूट करता है, वहां पर किस हिसाब का कब रिवाइज और तीसरा सवाल मिस्टर नीलांजन के लिए रहेगा मेरा, और वो इस पर रहेगा कि पैंडेमिक से बहुत सारे जो डिफरेंस थे जो पहले हुए थे, वहाँ कैसा अब सिचुएशन है, कोई प्राइस नेगोशिएशंस अभी हो रहे हैं या नहीं हो रहे हैं, उस पर आप हमें क्लैरिटी दीजिए सर।
Thank you, Dhananand, Kushal-ji. पहले जो margin guidance that we increased, or the revenue guidance that we increased, both of those are coming from what we've seen with our book of business and the confidence that the clients have in what we're doing. A lot of that work comes from the digital work that we're doing with our clients on their transformation journey and how we're supporting them in the cloud business. Specifically with respect to margin, Nilanjan will expand on it, but there were several specific one-off situations that we saw in Q2. Yet we see extreme strength in the way that we're going forward with the business, as also as we increase our commitment in terms of the salary increases that I just talked about. So overall, on the demand side, we see a good demand and a good pipeline, and thanks to some of the recent wins that we've had over the past few quarters. And on the margin side, a very strong discipline on managing the way we're looking at our business, in addition to some things which we saw on a one-time basis. With that, Praveen, over to you for the second part.
The segment side, from a financial services perspective, we continue to see good performance, both on a year-on-year and sequential basis. The areas of spend include in the mortgage processing, in payment space, in lending, and clients are obviously also, particularly banks, are also investing heavily in terms of enabling remote ways of working, advisories, digital banking, retail banking, and so on. Though we see a bit muted performance in capital markets and cards and payment space. On the retail side, we had a tough quarter in Q1, but we have seen improved performance in Q2. On a year-on-year basis, performance has been flat, but on a quarter-on-quarter basis, we have seen growth in coming back in the retail segment. However, given the nature of the segment, continued bankruptcies, and some of the challenges we are seeing, we remain cautious about it for the future. Manufacturing is another segment which has been severely impacted by the pandemic. We have seen impact on both demand and supply side, and in addition, they have also had impact of the trade wars. However, things seem to have stabilized in the coming quarter, and we expect spend to come back slowly. So while banking has done extremely well, financial services has done extremely well, the pace of recovery in both retail and manufacturing will be slow. But it's been very encouraging in the Q2, and we expect that pace to continue.
Yeah, so your question on pricing and margins, if I step back about 2 quarters when the pandemic started, and we all spoke to you at the end of March, when we were looking at entire cost management at that time, I think this was a 3-pronged approach that we took. Firstly, it was about deferral of costs, which was around promotions, wage hikes, hiring, etc. The second one was how do we cut discrete expenditure, whether it was travel or it was brand expenditure, etc. across. And the third was our continued strategic cost levers of on-site, offshore, pyramid, and automation subcontractors. So these were the 3-pronged approach we had taken, and clearly the impact of all those 3 have been seen in the margin improvements across quarter on quarter. Specifically in Q2, our margins, which went up from sequentially by 2.7%, about 100 basis points was from RPP, which is pricing. It's a combination of the impact which we see in this quarter, and also some impact of a moderated discount environment, which is ad hoc. The second one is, of course, around utilization, which had dropped by about 80 basis points in the previous quarter. So we've seen a margin impact of that as utilization has improved. And the third is the on-site offshore mix due to the temporary travel restrictions overseas. We have seen it improving substantially, and that was around the 80 basis points of margins. Now, as you can understand, a part of this margin benefit has been helped by the deferral of these costs, which is why we have seen some of this elevated margins. And going into the second half of the year, as Salil mentioned, some of these cost increases will now come back, like the wage hikes, the promotions, the hiring, etc. We will see some impact of that as well.
Thank you for the answers. Our next question is from Mugdha from CNBC. Mugdha, could you please unmute yourself and ask the question?
Yes. Firstly, congratulations to all of you on a really, really strong quarter. Salil, let me come to you first. Want to ask you again on, of course, M&A activity has really been strong for Infosys this year. Already 4 acquisitions in this calendar year. Firstly, is there more appetite for more acquisitions, and which areas will you look at? And if you can also break down organic and inorganic growth for us, and also highlight what is the contribution from the Vanguard deal to the revenues in this quarter. If you can highlight that. Nilanjan, a little bit on the capital allocation policy. While your peers have announced a buyback, you did not choose to announce a buyback. You have announced an interim dividend as well. But what is the rationale behind that? If you can highlight that for us. And also, Nilanjan, on the pricing, last quarter, Infosys mentioned that there were some pricing discounts in retail and manufacturing. Have those come back, or are they coming back to original levels? Praveen, to you, firstly, it's good to hear that promotions and hikes are back from January, but will they be on par with pre-COVID levels? And on voluntary attrition, it is quite low now. What are the factors that have led to this low voluntary attrition? And across verticals as well, you did say that the pace of recovery in retail and manufacturing will be slow. When do you expect to see full recovery?
Thanks, Mugdha, for those questions. I think on M&A, we've always had a view to build out the M&A which is focused on our digital capabilities. So you saw something we did with a strong partner, Adobe, with another strong partner, Salesforce. We've done something very exciting with another partner, ServiceNow, and then something in the product design space. So those are all different parts of the company, and now we're looking at how that integration is going. We are still open to looking at other things as and when they make sense, both from a strategic, cultural fit, and a pricing perspective. In terms of the impact of these are very small, and 3 of them were done in the last 3 months. They're small businesses really to start to give a real boost to our digital capabilities. In terms of the question on Vanguard, we don't break out specifically the revenue specificities of that client, at least in this scenario. We are very positive with respect to what we see on the demand side, and that's really more underlying how we looked at the revenue growth margin discussion that we've had. Praveen, over to you, please.
On the comp increases, Salil mentioned this will be across all levels effective January 1st. The quantum of increase will be identical to what we have done in the previous year. The second question was around attrition. Attrition obviously has come down dramatically. It's significantly lower than what we typically see in this time of the year and our comfort zone. There are several reasons to it. Obviously, during this pandemic, we have had tremendous focus on employee engagement, particularly engaging with employees in the virtual world was a big challenge. We have done several interventions. We have enabled managers to deal with employees in a virtual manner. We have created a lot of focus on physical wellness, emotional wellness. There have been over 200 initiatives. A lot of people have participated. We also engaged employees' family as well. There has been tremendous focus on health and safety of the employees as well. And even when we had employees coming to office, they have come into a very secure environment. And we have also been quickly able to enable them to work from home, providing assets and other things. So there are a lot of focus, and this effort is ongoing. I mean, even for employees who unfortunately tested positive, we have provided tremendous amount of support, right from hospital tie-up to providing ambulances and the whole thing, including continuous engagement with them. So that's one of the reasons why we feel attrition has come down. Obviously, this may not be sustainable once growth comes back, but we are confident that we should be able to sustain in a very narrow band going forward. In terms of segment performance, as I mentioned, on a year-on-year basis, we had positive growth in financial services, in life sciences, in high tech. CRL retail was flattish. Other segments had lower growth. But on a sequential basis, almost every segment had a positive growth. So from that perspective, we expect growth to have, degrowth to have bottomed out and growth coming back. Obviously, the pace of growth will be much faster in high tech, financial services, and so on. But retail, manufacturing, and other things, it will take some time for recovery to happen. But we have already started seeing some positive signs.
So, Mugdha, on your first question on capital allocation, I think we have a very clearly articulated capital allocation policy. We rolled that out last year in terms of an increased payout to our shareholders. So earlier it used to be 70% every year, now it's 85% over a period of 5 years. And the whole idea was to give more predictability to our shareholders and actually give more cash back. So the board considers, in line with that policy every year, what are our cash flows and our projected earnings. Based on that, in fact, that's the reason we've given the higher dividend of 50% on interim dividend on a year-on-year basis, due to our better performance and higher cash flows on a year-on-year basis.
Thank you for the answers. We'll now move on to the next question, which is coming from Chandra from ET Now. Chandra, please unmute yourself and ask the question.
Yeah. Hi, Salil. Thank you so much for talking to ET Now. You know, when I interviewed you a few weeks ago, you gave us a little hint of what is coming, but this is a clear outperformance. So I want to start by asking you, can this strong deal win in Q2 be used as a run rate for the future? And digital now, I think, is more than 45% for you. What is it going to be in the next 2 years? And, you know, where do you stand as far as Infosys contention as a bellwether is concerned? Do you believe it's a serious contender for the bellwether title? Nilanjan, if you can take us through the pricing. Salil mentioned during the quarter that pricing is stable, but are these newer services, digital services, giving you some pricing power? And Praveen, what percentage of employees continue to work from home? Will you look at a hybrid model going forward? Because, you know, you'll have said that social capital is also important. How is it going to pan out going forward? Thank you.
Thanks, Chandra, for those questions. I think on digital, what we are seeing is a continued change in the way different industries and different clients are looking at their digital journey. We've clearly seen through the last 6 months worldwide, the people who were more advanced in how their digital infrastructure was set up, those companies have accelerated even faster. And this is a time when a lot of those industries and those companies are looking to go at a different pace. With the investments that we had made specifically in digital over the last 2 and 3 years, that has been a tremendous benefit in what has happened. In terms of large deal wins, those, as we have discussed and I've shared before, are more volatile. So those are not predictable every quarter at a certain level. However, we believe our pipeline is fairly good. So if you look at a more annualized basis, we feel quite comfortable that the large deal activity will continue on. In terms of, we are at 47% of digital. I think very shortly we will cross over, of course, to the 50% mark. But the journey will keep continuing because the more and more that we build the capability in this and work with different clients, the more that we have opportunities in other spaces. In terms of bellwether, my answer remains the same. I think it's really for other people to look at those points and not for me. Nilanjan, over to you, please.
Yeah, thanks, Salil. So your question on pricing, yes, in fact, if you see digital, we've historically seen our digital pricing has been at a higher level, but at the same time, there has been margin pressure on the pricing pressure on the core. So that's the reason why some of that balances off. From a discount environment, definitely in Q1, we saw a higher elevated level of discounts, whether some were ongoing or some were one-timers. That has moderated a bit, definitely in this quarter, and we've seen some pricing impact of that. But like I said, this varies from quarter to quarter, so there's no secular trend on it as well.
Thank you so much for the answers. Praveen,
Praveen, on the work from home percentage?
yes.
So in terms of work from home, today we have about 99% of the people globally working from home. In India, Americas, in parts of Australia and New Zealand, it's close to 99%. In Europe, we have slowly started seeing some return to office. We have about roughly 10% of the people working in office in continental Europe. We also have presence in China and Hong Kong, and there it's actually the reverse. We have about over 90% of the people working in office and less than 10% working from home. Future, as we have said, is a hybrid model where people will have the ability to work from home or work from office in a seamless manner. It will depend on the nature of work, client comfort, and their own comforts as well. And it's not the same set of people always working from home or working from office. So for us, I think the percentage is academic because the same set of people can at times work from home and work from office. So our endeavor is to make sure that we create an environment where people have the ability to do that. And obviously, given the need for social capital and other stuff, there will always be times when employees want to come and connect and interact with their colleagues and so on. So that's the view. I mean, we are not really taking any point on the percentage or anything. And we have to be flexible. I mean, anyone should have the ability to work from home or work from office.
Thank you so much for the answers. We'll move on to our next question. It's coming from Sajid Mangat from Bloomberg Quint. Sajid, please unmute and ask your question. Sajid, we can't hear you. Sajid, I think you're unmuted. Could you please check again? No, I don't think we can hear you. Let's get back to you. Let's get your audio fixed and we'll get back to you. We'll move on to our next question for now. It's from Ayushman from Mint, please. Hi, Ayushman.
Hi.
Please go ahead.
Hi, Salil. Hi. So my first two questions are for you. So what are the sort of the trends in discretionary spend that you see? I know that the lines may be blurred now, but still, are clients willing to spend more on good to have technologies rather than the must have? Sort of, that's one. And second is, what is really driving your recovery? Which geographies? Is it driven by the US or is it driven by the UK and Europe? And for Nilanjan, could you just throw some light on the increase in PAT? I mean, is it also affected by people working from home and the less of traveling costs, etc.? Thank you.
So thanks for your question, actually. Discretionary spend is still patchy. What we see is where clients have embarked on a digital transformation journey, or they have a lot of focus on cost efficiency, automation, and in some cases on consolidation of vendors. Those are three big themes that we see in how some of these discussions with our clients are playing out today. In terms of the growth, we've seen growth, as you saw in the numbers, in all the geographies on a year-on-year basis and on a quarter-on-quarter basis. To be clear, there is more separation by industry. So, for example, as Praveen was sharing earlier, high-tech is growing quite well for us today. Life sciences is growing quite well. Financial services is quite stable in its growth. And then we see some of those other industries starting to come back more on a quarter-on-quarter basis, for example, retail. With that, let me pass it to Nilanjan for the other part.
Yeah, so Ayushman, I think clearly the reflection in PAT improvement is coming from the higher growth and the higher margins. And as I mentioned on the margins side, we had the margin improvement strategy at the beginning of COVID, which was how do we attack all the cost levers. Clearly, discretionary costs like travel, etc., have helped the margins. You have seen our travel costs actually coming down quite sharply. And of course, we think some of this will return once the pandemic is behind and travel continues to start again. But we are seeing some of those benefits of work from home because of lower travel, etc. On the same time, I think we also invested some monies, in technology enablement for people to enable to work from home. Technology spends, installing laptops to all our employees, security, communication spends also have gone up. But all in all, there has been a benefit because of this work from home.
Thank you, everyone. We have Sajid back with us. Sajid, can we have your question, please?
Yeah. Are you hearing me now?
Yes, please go ahead.
Okay, cool. Mr. Parekh, my first question to you is about the IT spend. You've been speaking to a lot of clients of yours. What is the kind of IT spend that you're seeing, especially in the new technology space? Are you seeing a better deal conversions which are happening now? Because there was the industry was holding on to new deals. Are you seeing new conversions, faster conversions happening of deals as we speak? And for Praveen, especially the BFSI space, if you can give us an idea of how the entire BFSI space is now looking with respect to new applications, clients moving on the cloud, and some other sectors like retail and energy. How are they looking for you? For Nilanjan, the operating margin guidance that you gave of 23 to 24%. My question is, what is the assumptions made behind that 23 to 24%? What percentage of the workforce will be working from home as for the entire FY21 to get a margin of 23 to 24%? And we also saw your employee benefit expenses coming down in this quarter by 200 odd crores. What is the reason behind that?
So thanks, Sajid. The deal conversions are about the same. There are some deal situations which move quite rapidly, but on average, most of the deal conversion timelines look about the same as what we saw at the start, which is about 6 months ago. So nothing in that sense has moved faster or slower. We see a good pace of deal conversions that's going through right now. In terms of what we see in the market itself, the type of work is still focused more and more on more digital work, more cost efficiency, and vendor consolidation. Praveen, over to you on BFSI and other sectors.
In the BFSI sector, as I mentioned earlier, we are seeing positive growth in banking space, whereas spend in capital market and cards and payment is a bit muted. In the banking space itself, there is a lot of spend in mortgage, in lending, in customer care, in payment space, and also in enabling virtual ways of working through digital bank, digital consultancy, and so on. There's also a lot of focus on security, and here there's a lot of application of artificial intelligence and analytics and so on. In the retail space, we see good traction in grocery space, health and home care, personal care. We are seeing good traction in the CPG world. We are seeing good traction in the parts of CPG world. Obviously, here again there is a lot of focus on online commerce because there's a tremendous increase in online spend. Adoption of online has hit the roof, and almost every retailer and even CPG companies also focusing on direct to consumer. In the utility space, obviously there is spend on grid modernization, there is spend on customer care and so on. So net in general across segments, there is a lot of focus on enabling remote ways of working, a lot of focus on accelerated digital transformation, a lot of focus on migrating workloads to cloud. Cloud is a big theme today because clients have very clearly recognized that cloud brings in resiliency, and the speed in which you can innovate can be much more faster if you are in a cloud environment. So there's a lot of spend on cloud as well. And obviously, there's also focus on cost takeout, consolidation of vendor, and those kind of opportunities. And these trends are common across verticals.
Yeah, so Sajid, a question on margins. Yes, we have upped our margin guidance for the year, as you've seen, from 21 to 23, which was previous guidance. to 23 to 24. Clearly, as we've seen the first half improvement, but we think there will be some headwinds in the second half as we start rolling out some of the deferred cost impacts as we've talked about, the pay hikes, the hiring across the promotions. So we will see some of that impact kicking in and will impact. We also know Q3 is a seasonally weaker quarter because of furloughs from our clients. So that has been baked into the overall guidance of 23 to 24 for the year. From the work from home perspective, I think we expect most of the year, a lot of the work from home will continue as is. You could see some geographies opening up slightly, but I think most of this year we will continue to see that happen.
Thank you. We'll take our next question. It's coming from Sarita Rai from Bloomberg. Sarita, please unmute yourself and ask the question.
Thanks, Garima. Hello, everybody. So two questions from me. One is about digital revenues, which grew over 25% and now closing in on about half your revenues. I'm assuming that a lot of your clients are already sort of digitally transformed. I wanted a more nuanced glimpse into what kind of work are you doing which is new and innovative for clients, especially clients in the BFSI sector. My second question is about H1b visas. Just last week, we saw the Trump administration further tighten restrictions on H1B, which might affect almost a third of all H1B applications. How is that going to affect your on-site, off-site balance? And what about cost implications, especially since you use quite a lot of contracted workers? Thank you.
Thanks for that question, Sarita. I think what we're seeing with clients is a lot more work in digital, and to give you a couple of examples, there's tremendous movement on how clients are leveraging the cloud. What they're doing with it, they're using the cloud to create new ways of distributing what they're doing in terms of their product, how they're connecting to their suppliers, how they're connecting with their employees. So these type of different ways of leveraging this new technologies makes it much more efficient for many of our large clients to scale, to be flexible, to adapt. So you look at the retail industry, the e-commerce revolution is absolutely remarkable in the type of stats you see, whether you see it in the Western European markets, US markets, Asia Pacific markets, what we're seeing in India. And those are the sorts of digital transformation activities that we are more and more participating in. For the second part, I'll just give one view. Praveen will have much more depth on it. We started a localization work in the US specifically several years ago. That's another example of a strategic decision that was made by the company, and that is paying benefits to us, because with the regulatory changes, that decision where we built 6 digital centers recruiting locally will give us some benefit. For more specifics on this, Praveen, over to you.
As Salil mentioned, since 2017, we have aggressively embarked on a localization strategy. In the last 3 years, we have recruited more than 13,000 workers locals in US. Today, nearly 63% of our workforce are local and visa independent. We have also recruited from universities, and we are also creating local talent as well through our training and technology capabilities. And in addition, we have also expanded our presence in Mexico and Canada, where we can provide same time zone services to our clients. At the end of the day, it's all about talent, and we are very confident that we should be able to bring the right talent, either locally or globally, to our clients and meet their needs. And we should be able to manage some of the challenges we are seeing on H1 with probably minimal impact.
Thank you. We'll move to our next question now. It's from Shilpa Fadnis from the Times of India. Shilpa, please unmute yourself and ask the question.
Hello, everyone. So this is Mr. Parekh. The US fiscal stimulus has so far kept the IT downside in check. Do you think the concerns around discontinuing the stimulus in the US could threaten recovery and also impact the banking sector? My second question is on if you were to review your own 3-year transformation strategy, how would you see that playing out? Especially, do you see the runway for recovery is taking a little longer post the pandemic? The third question, your revenue per employee has dropped to $53.5 thousand. I just wanted to get a clarity. Compared to last year, it's a drop of $1,000. How do you see that tying into your strategy of nearing 50% in digital revenue? Thank you.
Thanks for your question. So if I'll start with the first one, I think we see strength in the US economy at this stage. We don't have a specific view on the policy changes, but what we've seen so far from both European and US, where the economies have been supported, we see a lot of strength in those economies, and that is definitely a positive for what we see in our business. But more broadly, we see the huge trend in technology, which is a very large mega trend worldwide. That's driving some of these changes. In addition to that, to your second point on our 3-year plan, I think some of the strategic choices we've made, we've talked about digital, we've talked about localization, intense focus on large client partnerships and deals, the way we worked on reskilling, our own digital infrastructure within the company. All of those elements and choices we made a few years ago are what's resulting in where we are today. And in fact, my sense is our recovery is much faster than what we see with the industry as a whole. We are one of the few players who have a year-on-year growth in this environment. And so we think we are gaining market share compared to what the industry is seeing. And that's a function of where we see ourselves with our clients and the commitment of our employees.
Thank you. Our next question is from Joshelle from ET Prime. Joshelle has sent over a question over text, which I'm going to read out. It's for Nilanjan on how the DSOs are holding up since we have seen record low DSOs from other companies. Nilanjan, could you please take that up?
Yes. So we've also seen very good collections. I think our DSOs sequentially have dropped by 2 days, and that is reflected in our free cash flows. In this time also, we have extended some help out over the last half year to some of our clients in terms of extended credit terms, etc. So all in all, I think if you see our cash flows, we've been very, very pleasantly happy with what we have achieved and the reduction in DSOs.
Thank you, Nilanjan. Our next question is from Sankal from Reuters. Sankal, please go ahead and ask your question after you've unmuted. Sankal, can you hear us? There seems to be some connectivity issue with Sankal. We'll move on to our next question for now. It's from Swati Murthy from Money Control. Swati, please go ahead and ask your question.
Hello, sir. This is hope I'm audible.
Yes, you are. Please go ahead.
Just a couple of questions. One is regarding the H1b. So you had mentioned that localization definitely has increased, but these sudden changes, especially the wage hike, is coming into effect immediately. How much of an impact it's going to have on margins, and what are the alternatives you are thinking of? Offshoring has increased compared to last year to 73.9%. Some thoughts on that. And second question is about the hiring outlook. So compared to the last quarter, the number of headcounts increased to only 975, despite onboarding pressures. You can. Oh God. Okay.
Yeah, Praveen, go ahead, please. On the first one.
Yeah, we are not able to hear fully, but anyway, on the first question on the impact of H1b, as I said earlier, there are several levers, and today we are less dependent. And also the wage increase, while immediate, it will impact only people going on new LCAs going forward. But it will not impact people who will go on older LCAs or existing LCAs. So I think we have enough time for us to use many of the levers I talked about, including nearshore, offshore, more aggressive on-site hiring, and so on. So I think we should be, as we said earlier, we should be able to manage these challenges with minimal impact. The second question, I think, was on hiring. In this quarter, we had about 5,500 additions in Infosys Limited. About roughly 3,000 were freshers and about 2,500 were laterals. And for this year, we are looking at about 16,500 freshers in India joining us. And next year, obviously, the hiring has started for next year, and we are probably looking at about 15,000 hires.
Thank you. We will try Sankalp again from Reuters. Sankalp, if you can hear us, please go ahead and ask your question. All right. I think there is still some issue. We'll move on for now. Let's have Rukmini Rao from Business Today, please.
Sure. Thank you. Just wanted some bit of insight around really the pandemic-driven cloud migration or any of those deals that are happening. Is there some sense of commoditization of that? And, is there pricing pressure on such deals with most of the companies doing similar kind of work? Some bit of understanding around that. Thank you.
So on the cloud deals that you reference in this current environment, we are seeing today at least there's no commoditization. In fact, what we are noticing is if you have depth of expertise, and so some of the acquisitions we've done, and plus the organically what we've grown within the capabilities, whether it's in some of our partners on the public cloud, whether it's some of our partners on the hybrid cloud, or whether it's some of the SaaS players, the more expertise there is, the more capability combined with the industry knowledge, the better positioned you are, we are less commoditized. Because these are the sorts of things most clients are looking for.
So is the premium really more than what it was earlier on such deals, if they were?
I wouldn't say there's a premium. I would definitely say there's no commoditization. And the more differentiated you are, the more you're able to become more and more close to your client in how these transactions and deals are done. And as you build up scale over time, we can start to look at what sort of premiums that generates.
Thank you so much for the answers. We'll take our next question, which is from Malini from the Financial Express. Malini, please unmute yourself and ask the question. Malini, can you hear us? All right, there's some network connectivity issue, I think. We'll take our next question for now, which is from Stuti from PTI. I'm going to read out that question. The question is for Salil. What will be the impact of recent announcement on H1b Visa? Infosys had announced new hiring plans for US. How much of that has been completed? And the last part is 63% locals in the US. Is there scope to increase it further?
I think, Praveen, maybe you might be appropriate in answering some of those points, and I can come back at the end.
Praveen, I think you are on mute. Please unmute.
Hello?
Yes.
Am I audible?
Absolutely.
Okay. Yeah. No, I think I've already stated earlier, today we have about 63% of our employees who are locals or visa independent in US. And we have recruited about 13,000 people since we started this program about 3 years back. And even before the new regulations, we announced our intent to hire another 12,000 in the next 2 years. And finally, the number of people we hire will be subject to availability of talent. And we are not only hiring laterals, but we are also hiring people from community colleges, people from from local college universities, and we are training them, imparting them digital skills and so on. So I think as long as talent is available, we should be able to recruit as much as needed. And in terms of, again, we have recruited 13,000 people, and the announcement we talked about 12,000 people, and that's for 2 years, and it will happen over a period of time.
Thank you so much. Our next question is from Nikita Seriwal from Cogenesis. I'm going to read out this question as well. Want to get a sense on interactions with clients in the retail and insurance space. Could retail be one of the last ones to recover?
I can take that. As I said, we have seen, while retail was majorly one of the segments other than manufacturing majorly impacted by the COVID, we have seen very encouraging trends. This quarter, we have seen positive growth in retail. We have had 3 out of the large deal wins, we had 3 were from retail space. So we feel reasonably confident about this space. Clients are continuing to invest in online and in analytics and so on. At the same time, we are also a little bit cautious given the continued number of store closings, and also we have this festival season where spend is likely to be lower and could have a furlough impact and so on. But the positive thing is growth has come back, and I think over the next 2 quarters we'll probably start seeing come back to normal. That's from the retail space.
Hello. Hi, am I audible?
Yes.
Hi. So I actually have a couple of more questions. So your peers have indicated that they're seeing a mix of large as well as small deals. Is this something that you are seeing as well? And if yes, what are these new industries that are coming up for spending in technology? You know, what are they looking at? The second thing is you mentioned that you've been seeing a lot of vendor consolidation, and people are obviously choosing bigger companies like Infosys, which they trust. In which sector are you seeing the maximum benefit of this vendor consolidation? And any impact from Brexit, because the deadline is nearing now?
Let me start off on the trends. What we are seeing is more and more where we see companies which are focused on new retail, online tech companies which are changing what they're doing for different types of consumers, companies which are more focused on taking advantage of the cloud infrastructure or the digital capabilities. Those are the sorts of companies. Our client base is the larger companies in the global 2000 or the global 3000, and those are the types of companies there that we see the biggest impact in, where we see more and more activity for the change. For the others, we see where they're going through large transformation programs, where they're making changes to their established business models to leverage these new business models that are emerging and how those can be leveraged. On the vendor consolidation, we see several discussions, but we don't see a distinction across industries in those discussions. And those discussions are positive in that we see a good affinity from our clients for us, but those discussions will play out, in my view, over the next several quarters.
Thank you. We'll take our next question now. It's from Mini Tejasvi from The Hindu, which I'm going to read out. It's for Salil. She asked, you spoke about 100% variable pay, one-time special incentives, promotions, salary hike, etc. Can you elaborate on timeline and number of employees going to be covered under these? Also, percentage of wage hike, please.
Here, as Praveen shared earlier, we are going to look at what we do in terms of salary increases, which is going to be similar in the approach we've taken in previous years. The launch date I've already shared In terms of the number of employees covered in the one-time incentive, our focus is really much more on our junior employees. All of our employees have contributed tremendously. Everyone in this environment, as you can imagine, is going through individually challenges in how anyone is working, even if it's work from home. Everyone has different ways that they're dealing with that situation. And we feel the contribution that the employees have made has been absolutely incredible. And that is, in part, a huge contributor to how the company has performed. And that's the reason why we've laid out those different components of how we want to really recognize all of the work that has been done.
Thank you, Salil. We'll move on to our next question. It's from Megha Mandavia from the Economic Times. Hi, Megha. Can you hear us?
Hi, Garima. Thank you for the opportunity to ask this question. Hello, everyone. Congratulations on the stellar quarter. The question I wanted to ask you was on that change of guard is expected in the US. How is that impacting client decision making on IT spends? Are they delaying or deferring till after US presidential elections? And the second question I wanted to ask was that can we expect a continued decline in on-site mix of employees going forward in the US? Thank you.
On the first part, we don't see, of course, there's a lot of activity going on in the US with respect to the elections, but in the way we've seen our interactions with our clients across different industries, the decision making has continued on as they progressed in their business or in their transformation activities. In terms of the on-site mix, the way we see it, as Nilanjan was sharing earlier, there were travel constraints in the last few months, and that is in part helped. There was also a program they put in place to become much more efficient. However, over time, we'll see that some of the on-site mix will change as the travel opens up more.
Thank you.
Thank you so much. Since we couldn't have Sankalp join us, we have his question over text, which I'm going to read out. For Salil, his question is, while digital is growing to become nearly 50% of the business, how is the run side of the business doing in this environment? We had seen some pricing pressure there earlier. Has it improved, or has the pricing pressure increased? The second question is for Praveen. You're saying that you're largely going to depend on the steps previously announced to meet H1b challenges. Is there nothing new on that front that you will do?
Okay, let me start on the first part in terms of the run and the digital. So digital, as we shared, is growing at 25%. What we're also seeing very clearly is in many situations, clients are transforming their core to become digital. And in doing that, that's where we see a lot of the changes, a lot of the transformation happening in the client IT landscape. In terms of the run business is still a large part of our activity, running quite well. We have a special expertise in automation. We've deployed a lot of our AI capability into that space, and that's giving us tremendous benefit both in expanding with our clients, giving them some of the benefits of this efficiency, and then ensuring that we remain competitive in that space. For the second part, Praveen, over to you.
I think the kind of regulatory changes we are seeing is something we have seen in the past, and it will continue irrespective of which government comes to power. I think the only way out is to reduce dependency on visa, and that is a journey we are on in the last 3 years. And we need to continue the journey and maybe accelerate that journey as well. And I said there are multiple levers available. One is, of course, increasing localization and strengthening your presence in nearshore centers, same time zone, Then finally, it's also about availability of talent. As long as we have good talent, in the past, in this COVID environment, we have seen that the work can be done in a remote manner from work. So it's possible. I think we are extremely confident to service our clients based on whatever talent they need, whether it's with local onshore or with talent available in India or in other parts of the world. So that's our focus. But in the long run, I think we have to de-risk the business and reduce dependency on these.
Thank you so much. That wraps up our Q&A segment for today. Thank you so much, Salil, Praveen, and Nilanjan for answering all those questions so patiently.
Thank you.
Thank you. Let's see.
With that, we will close today's press conference. As we sign off, I'd like to inform that the archived webcast of this press conference will be available on the Infosys website and our YouTube channel later today. Thank you once again for joining us. Take care and stay safe.